We have how many hours per liter? If you're able to see what is happening, confirm. How many hours per liter do we have for the liquid oil? 2.5. Can you take 2.5 hours? We multiply by the number of liters, that is 20. What will you have? 2.5 by 20,000, again will give us another 50,000 hours. Good. Can we now get the labor cost? Direct labor cost. This is now labor hours, and we have labor rate per hour. The labor rate per hour is 90 shillings for the solid oil, and we are having 50,000 hours. So what will you have? 50,000 hours by 90. That is 4,500,000. When you take now, for the liquid oil, we have 110 times 50,000. 110 times 50,000. What are we getting? 5,500,000. Good. What we are having here is revenue. Revenue minus expenses. You are used to what we call the gross profit. It is normally called gross profit because the cost of sales includes both variable and fixed production costs, which again you're going to do under topic number 7. But when we only bring the variable production costs, we don't call it gross profit. We call it gross contribution margin, right? So we call it gross contribution margin. So what is our gross contribution margin? You take revenue minus prime costs. Revenue minus prime costs. So I can see this is 16,250,000 minus 9,500,000. What are we getting for solid oil? I'm told this is 67. Is that what you're also getting from your side? Good. How about the liquid one? 18 million minus 10,500,000. 18 million minus 10,500. Hey, 7,500,000. Okay, 7 million. I hope someone is doing the right thing under this part. This is 250 minus, we must have 50 somewhere, not a flat 500. How did you get 5,500? 5,500. So under the solid, under the liquid oil, we have 50,000 hours. 1 hour is equal to 110 shillings. 50,000 hours. 50,000 hours will be equal to how much? So we take 50,000, multiply by 110, divide by 1 hour. What are we getting? Is it giving you the 5,500,000? Is it giving you the 5,500,000? Bracket, we have said these are expenses. So if you want to have that, you can indicate less or just put them in bracket. Or even if you just leave it, we know you're actually deducting prime cost from revenue. So with or without that, your answer will still be okay. The 67.50 is correct. Thank you. Good. So after this, we remember we have the prime costs, right? We have the prime cost, so revenue minus prime cost is giving us what we call gross contribution margin. To the gross contribution margin, we now need to less the production overheads. So less production overheads. Production overheads. And once you get to this particular part, remind yourself of the method we're applying, the conventional or traditional costing method. Under this particular method, we only take one cost driver to distribute all the overheads. And what is this cost driver? As per our question, the cost driver is direct labor hours. The cost driver is direct labor hours. So I hope you're able to remember how we got the 50,000 for solid oil. You're also able to remember how we got the 50,000 for the liquid oil. Now, can we come to this part and get total overheads, right? Total overheads. And actually, before I do that, let me just do it. So total overheads to be distributed. Total overheads is equal to, somebody, are you able to identify the total overheads for our question? How did you get the 4.5 on direct labor? The same. For the liquid oil, it was 110 times 50,000. For the solid oil, it is now 90 times 50,000. That's how we got the 4.5. So total overheads is equal to 4 million. Total overheads is equal to 4 million. What you need to remember is the 4 million is for the entire company. That overhead was incurred to produce the solid oil to deal with the liquid oil. And now our interest here is to know what portion was taken by the solid oil. What portion will we take to the liquid oil? If you are dealing with different departments apart from the product, what portion will go to department A, department B, department C? That is what you want to do here. We have to distribute it based on one cost driver. Why? Because of the method we are applying. Now, once I have total overheads, we must get the cost driver or activity level, right? Let's talk about activity level, right? Activity level of the cost driver, we have been told, is labor hours. So what is the total labor hours for the entire organization? What is the total labor hours for the entire organization? And if possible, we are talking about budgeted labor hours. What is the total labor hours? Total labor hours, somebody? Total labor hours. Where are you getting this 100,000 from? Where are you getting this 100,000 from? Total labor hours for the entire company for the production of 25,000 liters of solid oil, 20,000 liters of liquid oil. How are we getting the 100,000? How are we getting the 200 that I'm given there? Let's see. So the 200 we are having there is, where are you getting the 200 from? 200. Look at our workings. When we are getting the budgeted labor hours, we said that 1 liter of the solid oil requires 2 labor hours. And you're supposed to produce 25,000 liters of the solid oil. 25,000 liters times 2 hours per liter gave us 50,000 budgeted labor hours. When you now go to the liquid oil, each liter requires 2.5 labor hours, and you're supposed to produce 20,000 liters of the liquid oil. That will give us 50,000 labor hours. Can we now get the total budgeted labor hours for the two products or for the entire organization? 50,000 for the solid plus 50,000 for the liquid. That will give us there's a very big difference between labor hours and labor cost. There's a very big difference between labor hours and labor cost. This one is labor cost, but we need labor hours. Why are we looking for labor hours? We are told the company currently operates absorption costing system using conventional direct labor hours basis, not labor cost, direct labor hours basis. So our activity level or cost driver is labor hours. And you have been able to see the budgeted labor hours is 100,000 100,000 hours. When you are doing topic number 4, when you are addressing topic number 4, we did something about overhead absorption rate. Are you able to recall? It is budgeted overheads, right? Divide by budgeted activity level. But now we are specific. We know the activity level. It is dependent on labor hours. That is the cost driver. So budgeted labor hours, right? Can we now get our overhead absorption rate? Overhead absorption rate is equal to budgeted overheads, the 4 million, right? The 4 million divide by budgeted activity level, which is labor hours, 100,000, right? Hours. And this one is in shillings. What is our overhead absorption rate? It is shillings per labor hour. How much is it? Good. So we now have our overhead absorption rate. For every direct labor hour, 40 shillings of the production overheads is absorbed into the production process. How did we get the 100? How did we get the 100,000? How did we get the 100,000? The solid oil has got 90 shillings per direct labor hour. But let's focus on this. Solid oil requires 2.5 hours of direct labor, and we need to produce 25,000. Sorry, it is 2 times 25,000 liters. The liquid oil requires 2.5 labor hours per liter, and you're supposed to produce 20,000. Those are the budgeted hours. So this one here will give us 50,000. This one here is giving us 50,000. When I add these two, I'm getting 100,000. Right? Good. So back to this. Again, remember we are still referring to what we did in topic number 4. In topic number 4. Again, we talked about overheads absorbed. Overheads absorbed. So the overheads absorbed is equal to overhead absorption rate times actual activity level. Overheads absorbed times, overhead absorption rate times actual activity level. We want to know the overheads that will be absorbed into the production process. Number 1, for the solid oil. So let's now bring what we call overheads. Right? Overheads. The budgeted activity level. Now that you don't have actual, if you're not given actual, budgeted will be equal to actual. If you are not given actual, your budgeted should be equal to the actual. So let's come here. Overheads absorbed for the solid oil. We talk about overhead absorption rate, the 40 shillings per direct labor hour. What is the total labor hours for the solid oil? The budgeted labor hours for the solid oil ni ngapi? Budgeted labor hours for the solid oil. $50,000. So when you multiply that 40 by 50,000, tunapata ngapi? That is 2,000, 200,000, 2 million. Then when we take 40 again by the total labor hours for the liquid oil, which happen to be another 50,000, what will happen? You're also getting another 2 million. Is it true that when we add the overheads absorbed, it is giving us the total budgeted overheads? Is it true that when you add the overheads absorbed, it takes us back to our budgeted overheads? So this 4,000 will be shared to the two products of department as 2,000 for 2 million. Then we also have 2 million. So let us deduct the overheads. It will give us what we call profit. Profit. So the profit, this one will be 47,50,000. This one here will be, oh, that one is very simple. That is 5,500,000. 5,500,000. That is the profit. That is the profit. Jamani. If 50,000 tunatoa wapi? There's someone who is not writing anything. There's someone who is not writing anything. Kabisa. One liter of the solid oil requires 2 hours of direct labor, and we are supposed to produce 25,000 liters. 1 liter of the liquid oil requires 2.5 hours, and we are supposed to produce 20,000 liters of the same solid oil or liquid oil. That will give us 50,000. These are hours. These are hours. Is it now clear? Thank you. So we have profit for all the 25,000 liters of solid oil, for all the 20,000 of the liquid oil. Let us go to the question and understand what are we required to do specifically in the question. Is it the profit per unit? Is it the cost per unit now or per liter? We are told in column form, calculate the budgeted profit per liter. The budgeted profit we are having here of 47,50,000 is for how many liters? Is for 25,000 liters of the solid oil. The 5,500,000 we are having here is for the 20,000 liters of the liquid oil. But in exams, we are required to get profit per liter. So we now come here and talk about liters produced. We have 25,000 liters. We have 20,000 liters. Can we now get profit per liter? Profit per liter, 4750 divided by 25,000. Tunapata ngapi? 190. So it is 190 per liter. That is the profit. Then liquid oil, 5,500,000 divided by 20,000. 275. 275. Are we together up to that point? Are we together up to that point? Are we together up to that point? In any single question under topic number 5, if we are told to use traditional costing method, conventional costing method, plant-wide, this is what we're supposed to do. I want you to be very keen, and I hope you are also following what is happening. When we got to the overheads, the entire 4 million has been distributed using labor hours. We have not looked at the number of invoices. We have not looked at the number of orders. We have focused on the labor hours as the only cost driver. As the only cost driver. Every other item will be the same when we get now to activity-based costing method. For my case, this is what I will do. This is what I will do. I want to do it now using method number 2. For my case, I will eliminate that. and also do away with this part. Do away with that part. And now call it, what if I'm told to do the same thing using activity-based costing? What will I do? Irrespective of the method you are applying, the prime cost will not be affected. The revenue will not be affected. The difference between the two is how we are treating the overheads. That's why I've decided to retain this section and now see how we're going to deal with the overheads. Then we now come and bring the overheads. So I will give you like 1 minute to also do the same. Then you get to this particular section. I'll give you 1 minute to have a similar thing. Then we proceed. Why 190? Really? Why 190? So here we were having 40. If 25,000 liters, 25,000, oh, let me start with the profit. If we've deducted 2,000 to 2 million, giving us 4750,000 as the profit. If 4750 net profit is for 25,000 liters, is for 25,000 liters, what is the profit per liter? What is the profit per liter? What will the profit per liter? So we take 1 liter times 4750,000 shillings. We divide by 25,000 liters. Liter cancel liter. So can we take 4750 divided by 25,000 and tell me whether it is equal to 190 or something else? Thank you. So have you been able to put that down for method number 2? Have you been able to put that down for method number 2? Good. Now, for method number 2, the difference is very, very simple. Under overheads, we don't take a lump sum figure. We take every element of the overhead. We take every cost pool of the overhead. So number 1, we need to bring the setup. The setup cost, distribute it. Number 2, the preservative handling cost. So we talk about oil, preservative handling cost, right? Then we are also looking at customer invoicing cost. Invoicing cost. Then we are looking at material handling cost. Material handling cost. Then we are looking at general overheads. General overhead. So let's start with the first one, the setup cost. So bring the setup cost. The total setup cost is equal to 270,000. Is equal to 270,000. What is the suitable cost driver for the setup cost? Right? What is the total, or what is the suitable cost driver for the setup cost? In other words, what you'll be required to identify in your exams is now the cost drivers. In these exams, you are given the cost drivers, right? For me to distribute the setup cost, I'm told that the cost driver is the number of setups, right? So our activity level will be the number of setups. So can we get the number of setups? Do we have it? We go back to additional information number 1. The number of setups per batch is equal to 2. The number of setups per batch is equal to 2. But still, I want you to get me the exact number of setups, because this examiner knew, no matter how simple the question was, The examiner had to at least twist something here. So can you give me the number of setups? For the entire company, the number of setups ni ngapi? Number of setups? Somebody to help us there. Number of setups? Ukisema 3, tunakosana tu. Ukisema 2, 1, that is wrong. Anything below even 100 is wrong. The number of setups. Now let us look at it together. We are told that for the solid oil, or the number of setups has been attached to number of batches. Let us now go to the batches first. The number of batches, we have 50 batches, right? Then we have 80 batches. And we are given the number of setups per batch as 2. So how many setups do we have for the solid oil? We have 2 per batch, but solid oil has got 50 batches. Then we have 1 per batch, but the liquid oil has got how many batches? 80 batches. So when you take 2 by 50, that is 100. When you take 1 by 80, that is 80. So the total number of setups is equal to 180. So we have 180 setups. Now, with that information, can we get overhead absorption rate? Overhead absorption rate is equal to budgeted overheads, the 270,000, divided by the number of setups, which is 180. What is the overhead per setup? 270 divided by 180? 1,500. 1,500 is the overhead absorption rate per setup. Can we now get the overhead that will be given to the solid oil? That is overheads absorbed. So overheads absorbed for the solid oil will be 1,500. For the liquid oil, it will be 1,500. That is the overhead absorption rate times the activity level. What is our activity level? Number of setups. What is the number of setups for the solid oil? Number of setups for those who are writing. For those who are writing. Sasa watu wameanza kuniangusha. I'll just keep quiet. Number of setups. Narudi tena to 2. For the liquid oil. So that will be 1,500 by 80 ni ngapi? 1,500 by 80. 120,000. Is it true that when we add back these overheads that are shared, we are getting back to the original amount of 270,000? Yes. Then it means our workings are correct. We proceed to this section. So the setup cost for the solid oil is 150,000. For the liquid is 120,000. There are those who are not writing anything. There are those who are not writing anything. Sasa kama uandiki, tutapotea kidogo. Are we together up to that point? Are we together up to that point? Thank you. Can we now do the same for the second overhead? The next one here, we have oil preservative cost. So oil preservative cost. So the oil preservative cost, the total amount is equal to 900,000. 900,000. This 900,000, how will we distribute the oil preservative handling cost? The oil preservative handling cost multiplied by something, okay. So the cost driver for the oil preservative cost ni ngapi? Ni nini? What is the cost driver? Here we add number of setups. How about oil preservative handling cost? It is the number of oil preservatives. The number of oil preservatives. Do we have that in our question? Do we have that in our question? So what we have been given there is the number of oil preservatives per liter. So number of oil preservatives. Now, what we are given there is per liter. The number of oil preservatives for the solid oil, we have 1 preservative per liter. And remember, we have 25,000 liters of the solid oil. So that will give us how many preservatives? 25,000, right? That is for the solid. For the liquid, we are also having 1 per liter, but we have 20,000 liters. So that will give us a total of 20,000 preservatives. When you take 25,000 preservatives plus 20,000 preservatives, what are we getting? 45,000 preservatives. Can we get overhead absorption rate is equal to budgeted overheads divided by budgeted activity level, the 45,000 preservatives. So that gives us shillings per preservative. What are you getting? 20 shillings per preservative. What is the share for the solid oil? What is the share for the liquid? Total preservatives for the solid oil, we were having 40 or 25,000. Sorry, 25,000. So we take the overhead absorption rate, which is 20, right? Common to all of them, but multiply by the activity level, which is 25,000, which is 20,000. So that will give us a total of, so this one will be 500,000. This one will be 400,000. If you try to add them back, it must give you what you are sharing out. 500,000. 400,000. So I hope you've been able to see the pattern now. I hope you're able to see the pattern. Thank you. Let us go to the next thing. The next thing here is customer invoicing. Customer invoicing cost. We have 10, 12. What is the cost driver for the customer invoicing cost? The cost driver for the customer invoicing cost. Number of invoices. So can we get the total number of invoices? Total number of invoices ni ngapi? We have, that's a direct thing, 360 plus 140, that will give us 500 invoices, right? 500 invoices. Can we get overhead absorption rate per invoice? 10, 12,000 divided by 500 per invoice. How much is it per invoice? 2024 or 2024. Can we now go for the solid? What do we have for the solid? What do you have for the liquid? So overhead absorption rate, I hope someone is able to remember that for us to be able to get overheads absorbed, I hope you're able to remember that. Overheads absorbed is equal to overhead absorption rate. You can see that's what we are looking for. We want to get overheads absorbed. And for us to get the overheads absorbed, we must calculate the overhead absorption rate, because overheads absorbed is equal to overhead absorption rate times activity level. So the activity level is what is changing. For example, this number of invoices. Invoices for the solid or liquid might not be the same, or they might be equal, right? Yeah. So that's why you can see once we get our 20 here, we are using it for the two products. Again, now that we have 2024, we'll use it for the two products, 2024, 2024. But now we multiply by the activity level, which is the number of invoices. So for the solid, I think it is 360. If I'm not wrong, this one is 140. Please go ahead and give us the total overheads distributed to the solid oil. 728,640. So 728,640. 283,360. 283,360. Thank you. So that's what we bring here. 728,640. 283,360. Kuna watu wanacheza tu, wakikaziwa sasa watu wako serious. Material handling cost. Material handling cost. I'll do away with this section because of space. Material handling cost. Material handling cost, we have 975,000. How do we distribute this? It is dependent on the number of batches. Number of batches. So can we get number of batches? Number of batches. We have 50, 80, that will be 130. Yes, so that will be 130 batches. So with 130 batches, overhead absorption rate is equal to 975,000 divided by 130. What are we getting? Shillings per batch. 7,500. Can we get for the solid? Liquid. 7,500 times the batches. So the first one has got how many batches? Is it so we have 50, we have 80. Can we go ahead and get 7,500 by 50? 375. 375,000. Then we have 600,000. Good. So we bring 375. 600,000. Great. And we now go to the last one, that is general overheads. General overheads. General overheads is equivalent to 843,000. 843,000. We are supposed to distribute it based on labor hours, right? So we have labor hours. Yeah, that five could disable now because you can actually see the answer in advance. Labor hours. Total labor hours ni ngapi? For the two products or departments. 100,000. Overhead absorption rate is equal to 843,000 divided by 100,000 is equal to shillings per hour, per labor hour. How much is it per labor hour? 8.43. 8.43 shillings per direct labor hour. Can we get solid? Then we have liquid here. 8.43. 8.43 multiply by total labor hours, 50,000. 50,000. What do we have for the solid? 421,500. 421,500. Are we all getting that? Are we all getting that? Thank you. So we have 421,500. Four 500. Now the remaining assignment here is, can we now get now the profit? Profit is equal to revenue minus prime cost to give us gross contribution margin. To the gross contribution margin, we less overheads to give us profit. So can we do it column wise? All these are deductions. Overheads are being deducted. So you can put them in negative or just leave them like this, but you know you are dealing with expenses against profit. Yeah. Anyone observing the answer? Can you remind me of over or under absorption? Sio lazima tupate a question. Solid 456. 456. 456. 74,860. No? $574. Liquid. Workings lazima. 5675. 5675. Then 140. Good. So if you can recall, the other one you are getting using traditional, you are getting 40 what? We are getting 4750, right? Then this other one you're getting around 5500. But now using this method, the ABC method, 4574, 5675. Good. So from there, can you now go ahead and give us what we call profit per unit or profit per liter? Profit per liter, do we have the number of liters here? Yes, 25,000. Then we have 20,000 liters. Can we now get profit per liter? Profit per liter. Profit per liter, 182.9944. 182.9944. How about liquid? 283.75. Good. That is what you are required to do. That is the only thing you need to understand under topic number 5. And that marks the end of topic number 5. Anything we are going to do under topic number 5 beyond this is basically revision. So do we have anything for you again under topic number 5? Anything to share with you? April 2025, the same thing. April 2025. So let's see if we can squeeze the remaining time to at least do the other method. April 2025. April 2025. Are all these questions set up? Yeah, so the only difference is I want to look at April 2025. We talk from the practical point of view. April 2025, question number. Question number 1B. They are referring to products. I want one where they are referring to departments. Do we have any? Is it 2022 December? 2022 December, are they referring to products? 2022 December. So the one I was telling you that you are required to give us unit level activities, batch level activities, product level activities. You do definition, right? You define or describe. That is question number 5B. Question 5B of December 2023. So you can write it somewhere. Question 5B of December 2023, CPA. What else do we have here? They are still referring to products. So I can see the products is common, but it's basically the same thing. It's the same thing. December 2022. December 2022. They are still referring to products. They are still referring to products. So you can see the trend is the same. And we can do it. December 2022, question number 3A. In ABC, we subtract overheads from prime costs. In ABC, we have prime cost, those are expenses. Prime cost is direct material, is direct labor. Revenue minus prime cost is giving us gross contribution margin. Then we less overheads. Under ABC, each overhead is separated. Under traditional costing, all overheads are merged together. That 4 million has got this material of 975, has got this 1012 of the customer invoicing. All those were grouped together to give us the 4 million. Yeah. So is it okay if I take you to that? Time will not allow me to complete it. But our next meeting is for topic number 7. Our next class is for topic number 7. So we have CPA, December 2022, question number 3A. Just to make some clarification. Let me see. So we have 3 products, TQM. We have TQM. We have TQM. So we have, what do they want us to get? Using ABC, determine the cost and gross profit per unit. Cost and gross profit per unit is very simple. What do we need to do? Look at the overheads first. The overheads are given as a odd figure for all the units produced. So let's start from revenue. Revenue. If you have some reasonable speed, you'll assist me to clear this question. So revenue, do we have units produced and sold? Yes. Are we having selling price per unit? Yes. What do we need to do? So 12,000 by 50 ni ngapi? 12,000 by 50? 600,000. The trend continue. 16,000 by 70. 16,000 by 70. $1,120,000. Then 8,000 by 60. $480,000. Good. Then we move to which part? The prime cost. Direct material, direct labor. So direct material tuko na nini? Direct material, you are being told direct material cost per unit is 16, right? Per unit of the output. So can you take 16 by 12,000? 16 by 12,000? 16 by 12,000. $192,000. The same trend to continue. We have 24 by 16,000. 24. Revenue is equal to units sold times selling price per unit. Unit sold 12,000. Selling price per unit 50. That is 600,000. And the trend continues. 384,000. The last one? The last one in happy? I'm told it is 160. That is 20 by 8,000. 160,000. Then we have direct labor. If you look at our previous question, the direct labor cost was given, direct labor cost per liter, right? Then number 2, we want to get total labor hours first. In this question, we are given labor rate per unit produced, not per hour. Because if it was given per hour, we want to get the total labor hours for the units produced. So here we multiply it directly. Now, our labor cost per unit is 8 shillings for tea. Can you take 8 by 12,000? Can you take 12 by 16,000? Can you take 8 by 8,000? That should be 8 by 8,000. 64. So when you deal with these 3, you'll be able to get what we call contribution margin. Contribution margin. Which you'll be able to do. That's a direct thing. Contribution margin. My interest is on the overheads. As I get to the overheads, I must first of all recognize the method I'm using. A, B, C. Activity-based costing. So under overheads, we have to list all of them. Right? The first overhead is machining cost. The next one is production scheduling cost. Then we have setup costs. Let me just do one. So the machining costs, we are told to distribute it based on the machine hours, right? So we have machining costs of 1 or 2,000. We are told to distribute it based on machine hours. What is the total machine hours? That's what the problem is. Total machine hours. Look at our question. we are given information on the cost drivers is given as below. So we have machine hours per unit, 1/4, 1, and 1 1/4. So 1/4 of 12, half of 12,000, that will be 6,000, right? Then 1 or 16,000 divided by 1 will give us how many hours? 16,000 machine hours. Then for product M, we are given 1 1/2. So when you take 8,000 divided by 1 1/2, what are you getting? Sorry, there's a problem. There must be a problem with my workings here. So machine hours per unit. 1 unit requires 0.5. 12,000 will require 6,000 hours. Okay. Then 16 by 1, that is 16,000. Then 8,000 by 1.5, that should be 12,000. Thank you. That should be 12,000. When you add all of them, what are you getting? When you add all of them, that should be 20. Inakuja 34. 34,000, right? 34,000 hours. Good. So can we get overhead absorption rate very fast? 102 divided by 34,000 shillings per machine hour. How much is it? 3 shillings per machine hour. So we have product T, Q, M. We take 3, multiply by the activity level, which is 6,000, which is 16,000, which is 12,000. That will be 18,000. That will be 48,000. That will be 36,000. If you add all of them, you must get 102. If you're not getting 102, your workings are wrong. So we have 18,000. We have 48,000. We have 36,000. I hope you are now beginning to get what is happening. I lost my network. How did you get 34,000? One product requires half hours, and you're supposed to produce 12,000. So 12,000, 12,000 times 0.5, that is 6,000 hours. Then we have 16,000 times 1 hour per unit. Then we have 8,000 units times 1.5 hours per unit. Is that clear? Thank you. So I hope you've been able to see the trend. Then production scheduling cost, number of production runs. So production scheduling cost, we have 84,000. Supposed to be done based on the number of production run, which is number of production runs. We have 6 plus 16 plus 8. Inakuwa ngapi? 6 plus 16 plus 8. 6 plus 16 plus 8. Someone has not been able to see anything there. Yeah, 30. So we have 30 production runs. Overhead absorption rate is equal to 84,000 divided by 30 shillings per production run. What are we getting? 84,000 divided by 30? 2,800. So can we get TQM? TQM. Right, so we have 2,800, 2,800, 2,800, but we multiply by 6, 16, 8. What are you getting? What are you getting? What are you getting? What are you getting? 2800. So N is 22,400. 22,400. Q ni ngapi? 16,800. I think is this one here. 16,800. Q ni ngapi? 44,800. If you add them back, you should be able to get the 84,000. 16,800. Sorry, 16,800. Then we have 44,800. We have 22,400. So that is what we have. And I want us to agree. What if you do this remaining part and then you post your answer in the group so that your colleagues can also confirm whether they have the right thing or not? Or you refer to LMS for the, which semester? We can talk about, is it January, April 2025? Evening class videos. You'll also get this under topic number 5. You'll get another topic number 5. Or you do everything. So during our next class on Friday, the first 3 minutes, you will be giving me your figures. I put them here. Then we compare results. You can take any of those 3 options. Go to LMS under January, April evening videos. You will get this. Post your workings in the group. Your colleagues can also see whether you have the right thing or not. Or we meet on Friday, the first 3 minutes, you give me your figures, we compare notes, then we go to topic number 7. Good. So that marks the end of my today's discussion. That marks the end of topic number 5. Thanks for your time. Have a blessed night, and let's meet on Friday.